Good day, ladies and gentlemen, and welcome to our webinar on NFTs and the investment of the future. Now, before we get started, I need to clarify, I am not associated with any companies, any websites, any NFTs. We're here just today for knowledge, but I'm going to be giving you some of the major websites that deal in NFTs, and I'm not going to be making suggestions. I'm just going to give you the names or the website addresses, but please have a paper and pencil available to write down the names of these addresses. Because to find all this, NFTs are new, so to find everything is a little bit of research. So I'm going to share with you my research. So the first thing is, what does NFT stand for? Non-fungible token. Non-fungible means that it's unique and can't be replaced with something else. For example, a Bitcoin is fungible. Trade one for another, and you'll have the same thing. Okay, so an NFT is a one-of-a-kind, for example, one-of-a-kind baseball card, trading card. If there was only one left of a Jackie Robinson signed, autographed baseball card from the I don't know when he played, 1950s, okay, it would be a one-of-a-kind. There might be other Jackie Robinson cards out there, but only one that he signed and dated. Okay, so it is unique. So if you traded it for a different card, you'd have something completely different and something of a different value. In simple terms, NFTs are digital tokens in the blockchain network. Blockchain is the underlying technology in which cryptocurrencies work. The tokenization of anything ranging from a JPEG to music to a tweet can be turned into an NFT. Basically, anything that can be stored in a digital format can be an NFT. Okay, so even though we talked about the Jackie Robinson baseball card, it is a physical card. Okay, it can't be stored in a digital format because somebody actually has the physical card. Now, it is any digital collectible that can be conceived to hold value. The name non-fungible comes from the fact that each token is unique and cannot be exchanged for something else exactly alike. So at a very high level, most NFTs are part of the Ethereum blockchain network. Okay, they are not usually part of the Bitcoin or any other network. They're done through the Ethereum blockchain network. Ethereum is a cryptocurrency, as we all know, like Bitcoin or Dogecoin, but its blockchain also supports these NFTs. So you have to have the blockchain and the technology that supports these NFTs. Like some have smart contracts, and well, Ethereum has smart contracts. Okay. Now, these NFTs, they store value as well as extra information that makes them work differently from, say, an ETH coin. It's worth noting that other blockchains can implement their own version of NFTs. So, years ago in 2008, 2009, we only had Bitcoin. Then after Bitcoin and the blockchain network, we eventually got Ethereum, Ripple, Dogecoin, Viper, God knows how many are out there today. And all of these function on the blockchain technology, but they're all now modified and slightly different. Okay, but once you have something different, you can have the same digital piece of art or the same digital NFT on multiple blockchains because it's unique. It's only one based on when it's created. It's worth noting that other blockchains can, though, implement their own version of NFTs, but not your NFT. So NFTs can really be anything digital, such as drawings, music, your words, your brains, all turned into an AI. But a lot of the current excitement is around using the tech to sell digital art. Now, in economics, a fungible asset is something that with units that can be readily interchanged like money. With money, you can swap a 10-pound note for two 5-pound notes and you will have the same value. However, if something is non-fungible, this is impossible. It means that it's totally unique properties, so you can't break it down or exchange it for something else. It could be a house or a painting such as the Mona Lisa, which is one of a kind. You can take a photo of the painting or buy a print, but there would only be one original painting. Now, over the years, we've seen people who, in the stock market, try to take a famous, well-known painting, and they own it, and then sell shares in it. And say you could have 10 shares of this Rembrandt, and if that Rembrandt goes up in value or somebody wants to buy it in the physical world, it's sold because the NFT owns it or the stock owns it, and all that profit is then distributed to the shareholders. But once that Mona Lisa or that Rembrandt is sold, your stock is dissolved and you're paid your money. Because all that existed was that Rembrandt. And when somebody buys it for hard cash in an auction, they then become the owner. So basically, they bought all your shares. It's like when a company sells all of its shares or it gets sold to another company. Now, the digital tokens can be thought of as certificates of ownership of virtual or physical assets. Still confused? I'm a bit confused also, because I've never completely figured out how you could own a house through an NFT. It's a physical house. It can be damaged. It can change. It can have zoning. It can have taxes. It can have all kinds of things. It can have a fire. It needs to maintain insurance, pay property tax. I don't know how all of that fits together with an NFT. Now, it's generally built using the same kind of programming as cryptocurrency, like Bitcoin or Ethereum. But that's where the similarity ends. Physical money and cryptocurrencies are fungible, meaning they can be traded or exchanged for one another. Yes, you could actually sell or buy several Ethereums with a Bitcoin. They're also equal in value. $1 is always worth $1. One Bitcoin is always equal to another Bitcoin. So in other words, I have a Bitcoin, you have a Bitcoin. They're worth the same thing. Crypto's fungibility makes it a trusted means of conducting transactions on the blockchain. NFTs are different though. Each has a digital signature that makes it impossible for NFTs to be exchanged for or equal. So you cannot simply exchange or trade NFTs because there's only one. So this is where it gets kind of unique. Blockchain technology and NFTs afford artists and content creators a unique opportunity to monetize their wares. Now, I guess there's some possibility of one day of me monetizing the recording of this class because it's unique, it's all digital, but I would have no idea how. For example, artists no longer must rely on galleries or auction houses to sell their art. Instead, the artist can sell it directly to the consumer as an NFT, which also lets them keep more of the profits. In addition, artists can program in royalties, so they'll receive a percentage of the sales whenever their art is sold to a new owner. Now, this is an attractive feature for an artist. In other words, there's an NFT for Barry Norman's sketch. Okay. Now, when I made this digital sketch, in my programming it says every time it moves or it's sold to another person, 1/10 of 1% of that sale price is then paid as a royalty to Barry Norman. Well, what happens is every time I don't have to watch it, I don't have to be involved in it. Every time a transaction happens with that NFT, I get my 1/10 of 1% of the current value. So traditionally, works of art such as paintings are valuable because they are one of a kind. But digital files can easily and endlessly be duplicated. With NFTs, artwork can be tokenized to create a digital certificate of ownership that can be bought and sold. So I guess if you want to buy that Rembrandt through a NFT, the certificate of ownership to own that Rembrandt, that anybody who's buying or selling it would need, is through an NFT and is all documented in the NFT. And the owners of that NFT are the certified owners. So if there was, Barry Norman's masterpiece and it was a physical thing out there in the world, but the ownership, the title that documents the ownership is, because you always have to show ownership, is an NFT. Every time that ownership changes, is all recorded with the NFT because that NFT has to be changed. So as with cryptocurrency, a record of who owns what is stored on a shared ledger known as the blockchain. The records cannot be forged because the ledger is maintained by thousands of computers around the world. NFTs can also, now, I know some of you know this, some of you don't. We will get on to investing in the other things that are available to us, whether it's trading, buying, what the platforms are, where you can get them, how you can create your own NFTs, okay, and where the future might go. So hold on, we'll get there. NFTs can also contain smart contracts that may give the artist, for example, a cut of any future sale of that token. So, you still confused? Well, it's a tough concept. In theory, anybody can tokenize their work to sell as an NFT, but interest has been fueled by recent headlines of multi-million-dollar sales. So the fact is, if Barry Norman made Barry Norman's masterpiece, would anybody be interested in buying it today, tomorrow, selling it, reselling it, and what would the value be and how would it hold its value? But it's weird. Last February on the 19th, an animation gift of Nyan the cat, which was a meme that became very popular, sold for $500,000. Now, it's all digital. So the owner is the only one who can use it, and the code is all there. So if anybody uses that code or digit, it's automatically traced back to that owner. A few weeks later, musician Grimes sold some of her digital art for more than $6 million. Now, it's just not art that is tokenized and sold. Twitter founder Jack Dorsey has promoted an NFT of his first ever tweet, with bids hitting $2.5 million. Now, this is a digital tweet. I don't know how Jack Dorsey owns it. He tweeted it on his account, but it tweeted out into the public. So how you create ownership of a tweet, I don't know. Now, for some, the opportunity paid off big time. Graphic designer Mike Wilkelman, also known as Beeple, sold an NFT for a record $69 million at Christie's auction in March. Okay. Now, a lot of this actually happened, but the people involved were pushing up pricing, not to scam anybody, but they were trying to push NFTs into the public eye. NFTs have never previously captured the public imagination in such a big way. Investors and speculators saw a new opportunity to try and win big in a rather novel financial market. Artists and creators saw a new opportunity to monetize their work in the digital world. Grimes, Eminem, 3 Lau, Lindsay Lohan, and many other celebrities also cashed in on the trend. Critics of NFTs have laundry lists of concerns about non-fungible tokens, including fraud and theft. The criticism of the non-fungible token, but doesn't seem to significantly affect anything in the space. It's growing like crazy. Now, it's things like with Bitcoin. We remember all the theft scams and everything else that happened, and God knows what happened. Mount Gov, all happened until we got to today, where we have much better security, much better reliability. We have regulated platforms. While the most known use case of non-fungible token technology surround the concepts related to digital authenticity and ownership, on the internet as we know it, some innovators are exploring an entirely new environment for NFTs, virtual reality. Now, virtual reality gaming and games have become a big place. Can you imagine building and developing a character or 20 characters that actually are in a game? Now, if the game becomes very successful and you own the character, and for people who want to have that character in their gaming, have to buy a portion of that character or any capital generated by that character through the gaming company, you get paid for. So you might want to buy a half dozen characters in a new upcoming game. Okay. Or think about virtual reality. Virtual reality is so new, but it's so much programming to build a virtual reality of Mars. And somebody writes all the coding and builds it all. Now you might want to use that virtual reality to put a game into, to put something else into, to use. Well, you've got to have the rights to use that virtual reality. So you have to buy the rights, pay for it, and where's it? That increases the demand increases the value increases the NFT. Forbes recently reported that Space Force partnered with digital artist companies Worldwide XR and View XR to release their own NFTs with augmented reality features. According to the report, the NFTs are accessible to their owners through the View XR app, which is available on both iOS and Android. Okay, so you want to buy this incredibly great image in 3D, this virtual reality to use on your whatever, you have to pay for it. That increases the value of the NFT. So this is one website I found for you, which is www.worldwiderxr.com. Now remember, NFTs are a little bit weird. You can debate round in circles about the scarcity and the parallels with more established and well understood forms of collecting. You can explain why right-click savings an image is not the same as actually owning the associated token. And it brings up art fraud and provenance. Well, let's get out of art fraud and provenance. Okay, we talked about that, owning a Rembrandt. But remember when the internet started a couple years ago, and I needed a picture to use at a piece of content on an article, whatever. I just go to Google, do a search, and I'd find one I liked, put it in my article, and off it would go. Then we got companies like iStock Photo and Dreamland. Okay, they started selling this stuff. Then we got development of the ways to track and monitor copyright. Who owns this stuff? And all of a sudden, you be getting this email from iStock Photo saying you owe us $92 because you used our photo in this way without purchasing the rights. Now, I run a fairly large YouTube channel. Now, over time, so many people have put my videos on their website. Well, you know what? The minute it runs, YouTube notifies me there's a copyright infringement and somebody's using my stuff. Well, if I wanted to go collect money or fine them for something, because once somebody's used it, they actually kind of owe you the money even though they never agreed to anything. Well, that would increase the value of my videos, so I had them through NFTs. Okay. Now, you might explain that anyway, NFTs are, as we currently know them, say a collection of 10,000 ape images, for example, well, are only an early phase iteration of genuinely transformative technology. Nonetheless, when people look at the collection of apes, in which each piece now costs hundreds of thousands of dollars, it is reasonable for them to be initially baffled. They might also wonder how to go about profiting from a clearly booming market, and there are several ways that anyone can do this with a little application. There are certain things one should know before indulging in a buying spree. As a buyer of an NFT, one would need a digital wallet to store it in. Now, no prizes for guessing the second requirement. One would need cryptocurrency. Ethereum is the most accepted crypto by NFT providers. Ethereum could be purchased directly from the website providing the NFT, or you could have it transferred from an exchange, or you could have it in your wallet somewhere. So you can't use a credit card. You can't just buy it for cash. Okay, you can use a credit card to buy the Ethereum in a credit card, but it's on the Ethereum network, so it must be processed through Ethereum. So some of the websites that cater to NFT purchases are, somehow I just jumped past one, Foundation. This is a community where artists must receive invites or upvotes from fellow artists or creators to post their art. It exclusively can be compared to a new audio social network called Clubhouse, which is, now you can find this website at myfoundationapp.com. Then there's OpenSea.io. This is a peer-to-peer platform where all other needs to get started is to create an account. Different categories of art forms can be browsed and chosen thereafter. Several other websites offer a platform to get a piece of an NFT buy. The following websites also sell NFTs: Super Rare, Nifty, Gateway, Via, Viv3, Bakery Swap, AXIE Marketplace, and NFT Showroom. India too has some such platforms. Now there are two ways to go about selling NFTs. One way is that you own an NFT. Alternatively, the person selling an NFT can mint it. Okay, this is what you're waiting for. One can mint NFTs through sites such as OpenSea, SoulSea, etc. After minting the NFT, one can list it on any of the sites for sale. It's important to understand the value of the NFT will be based on what someone is willing to pay for it. Demand will drive prices. All that being clear, one should consider buying an NFT after proper research, as it is with any other form of investing. Now, one of the future things, and one of the things that are actually happening now, if you're an early beginner, is flipping and trading NFTs. This is for those who are uninterested in art, the community, or reflections on how Web3 will transform society and feed starving creative wastrels who have nothing to eat but dried pain. It's like me, I'm just an investor. I don't really care about the piece of art, except does it have value and what will affect the value. Okay. I'm not involved in the Bitcoin community. I don't propagate Bitcoin being, the currency of the future. I just see it as a ways to make profit. Now, flipping NFTs means you buy cheap in bulk if possible and sell it at a profit without hesitation and with neither emotional attachment to the asset you are handling nor consider of their long-term prospects. Now, this is the most intensive and demanding way to profit from NFTs. You need to be on top of what is dropping, who is involved, and how much demand there is to be. This means basically monitoring everything all the time, which requires hanging around in as many Discord channels and Twitter feeds as you can manage and getting on whitelists where you can. Remember, this is what in the beginning of Bitcoin. We are monitoring every social network. You're watching for the growth of the social networks. You're watching for headlines. You're watching for everything, saying, Bitcoin's going to go up, okay, because the demand is increasing. Or in this case, say a hot digital artist who just sold 10 of his pieces for $2,000, dropping 4 more pieces today. Well, maybe you can make a deal right through the website to buy all 4 pieces for $4,000, and then you relist them, and hopefully you'll get the $2,000 piece he was able to get them for before. Now, you can also invest in NFTs, whereas when you're flipping NFTs, your only concern is whether or not supply will, even if over a short period of time, outstrip demand, and how intensely investing in NFTs is closer to traditional art investing. This way, you are in it for the long term, and so it is best if you're more appreciative of the work itself. Now, you don't have to appreciate it more, but say, for instance, you're into gaming, and say a hot game out there, somebody releases 5 characters or 2 weapons that can be incorporated in that game. Maybe you want to grab hold of them and sit on them because you're helping those characters get integrated in the game and get more popular and therefore get more demand. Now, this is a less degenerate, more zoomed out approach, but it does not bring the roller coaster thrills associated with uncouth flipping. It also requires that you can invest with no need for short-term quick returns. And since it trends to be a blue chip project, this will work over longer time spans. Investing amounts could be relatively or actually high. Then we have DOAs and index funds. Decentralized autonomous organizations, DAO, are still a nebulous concept. And the best way to get a handle on emerging new entities is to jump in, explore, and become involved. There are many flavors of DAOs, but of interest, here are a few of those orientated towards NFT organizations. In other words, this is a business who's out there buying up NFTs. Some comparatively well-known examples are Jenny DAO and Pleasure DAO. And if you prefer something more akin to an index fund, there's Index Coup's Metaverse Index. So there's a lot of choices out there. Though through these methods, you can gain exposure to NFTs and the metaverse projects without having to be personally active in keeping track of every development. At the same time, though, if you do want direct involvement, then part of the essence of a DAO is that it has hard code community steering and democratic guidance, which you can get involved in. Then you can also invest in infrastructure. Okay. What's infrastructure? Infrastructure is the technology that's growing out of that. Just remember a couple years ago, all the big deal about Bitcoin and blockchain. All of a sudden, blockchain is being used all over the world by every major company in some way, shape, or form. Well, if you had invested in some sort of technology associated to, or the infrastructure, would have paid off a lot of money if you had become an early miner. So you might look at some incomprehensible NFT artwork, soak up the collective insanity that appears to fuel the entire NFT industry. Let an NFT in joke fly over your head, and then decide that while you would like to make some money from all this, you want as little as possible to do with the actual NFTs themselves. In which case, invest not in fickle fly-by-night JPEGs, but instead in the logically engineered infrastructure upon which the upper frenzy plays out. Primarily, there are the blockchains themselves. And if you're looking at NFTs and where they might be heading, the obvious investment may be Ethereum. But with Cardano and Solana making moves in the NFT world, ADA and Sol would have to be tops on your radar. Additionally, you might want to pick up some IMX, the Immutable X token, and it would be remiss not to pay attention to Looks, the native token powering the new Looks Rare marketplace, which is aiming to disrupt the dominance currently enjoyed by OpenSea. So remember, we talked about OpenSea a bit ago. Okay, they're one of the most prominent NFT platforms. So you can also use intersecting approaches. For those looking to profit, how to approach NFTs depends on individual circumstances and to what extent the assets themselves hold direct appeal. Some coming from the art world might have a better intuition of what makes for a desirable collection, while buying into the infrastructure may be more interest to experienced tech investors. Ideally, an approach that takes in all angles could be advantageous. A particularly striking aspect of NFTs is they exist at a point where many different sectors and personality types intersect. This brings unpredictability, a riotous pace of change, and some often extreme turbulence, but also the opportunity to effectively apply a wide range of trading and investment techniques. So keep in mind, NFTs are just a little bit weird. NFTs are growing. We don't know where they're going, but they seem to be opening opportunities for investment and trading as the future grows. And somewhere else you should look is space tech. Space technology is becoming a booming field with investment dollars running into it with high profitability. So thank you very much for joining us, and have a great day. Bye now.